shares are surging on news of the company is replacing the CEO, Laxman Narasimhan, with Chipotle's Brian Niccol. And joining us this morning with his reaction is Evercore ISI's David Palmer. For now, at least, still has a hold and an $80 target. David, good to see you again.
Thanks, Carl. Big news.
Looking at your note this morning, you argue that it's great, but reclaiming what you call the premium brand is going to be trickier than turning around Chipotle.
Well, it's going to be interesting to watch the first steps. I mean, clearly, Starbucks has a brand momentum problem in the U.S. Their recent trends have been down, same-store sales-wise. There's people that have talked about doing things like spinning off China, but this is really a U.S. brand turnaround challenge. The good news is that Brian is the guy. He seems like the one person that has this omni-channel background, operations, marketing, CRM or customer relationship management, and he brings all of those tools to Starbucks. Clearly, this is a premium brand, and it's not one where you have this food value advantage like Chipotle did, but he seems like the guy for the job. And one big thing is, you have Howard, the founder, that's still out there. You needed somebody with the gravitas to essentially make this his own company and attract talent to join him on this brand turnaround.
So you're calling Niccol the one restaurant executive who has the gravitas to do exactly that. Why not re-rate?
Well, right now we're going through calls with the companies in both cases. So everything right now is under review in terms of how we view this company, how we view the earnings opportunity. I think everyone right now is grappling with that. And so we have a lot of questions, and we'll be talking to both companies.
I mean, the move today is pretty big. I just have a question about investor expectations and where they are relative to what we can actually expect as far as a turnaround. It reminds me of when Mary Dillon, the former Ulta CEO, was appointed CEO of Foot Locker, and that stock went up more than 20%. She was a great CEO, and this is nothing against Mary, but then it was, not a quick road to recovery on the earnings front in terms of a turnaround for Foot Locker. So what's realistic to expect after a move like this?
The old Starbucks used to talk about an EBIT margin of something like 15% being realistic. Right now, the street numbers are more like 16.5% margins expectation for fiscal 25. At the higher number, would be, if that's in play, that would be high teens earnings upside from where the street is over time. The valuation's in the low 20s. I think some people are going to be thinking that this can go back to its old rating in that high 20s at least type valuation. That's where the dreams are going to rest. But you bring up a great point. This is not going to be necessarily easy. What makes Starbucks special is that human connection, that premium brand positioning. The baristas have to be energized. Clearly, they've had some union problems. Clearly, they've had a lot of new products that haven't worked. They need to rediscover what the core is, solve these operational problems in a way that re-engages their baristas and the consumer. So they've got a lot of heavy lifting ahead, but this seems to be the one executive that has experience in a lot of these areas.